We have him here today live with us. And I know it's challenging times that we're all in. I mean, here in Singapore, we are undergoing what is called the circuit breaker, where we are staying home for almost a month. And the government has released billions of dollars tapping into the reserve just to help save jobs, help companies tide through this difficult time. Apart from that, one thing we wanted to talk about today is I know some people who have, through the years, been very diligent with their money and are now looking for opportunities in the market. I'm sure all of you might be familiar with this quote by Warren Buffett, being greedy when others are fearful. But at the same time, there's also the element of fear. We've seen the stock market come down. Amidst that, we also see properties. The property market is kind of at a standstill because even viewings can't be done. So I think we've been getting a lot of questions on, should we invest in stocks now? Should we invest in indexes, or should we look at property? And I thought there's no better person to share from his own experience than Dr. Rowe, who's been looking at these things for many years. This is not going to be financial advice. It's going to be our own perspective. And for those of you who are joining us live, feel free to jump in with any questions that you might have, and we can try to pick them up. Otherwise, feel free to comment, and we'll get back to you in our next video as well. So, Dr. Rowe, what are some of your thoughts, on these questions that we've been getting?
Thanks for the questions as well, and thank you for having me back on again. Hi to everybody in Singapore and in Asia. You might see the boxes in the background. We're still in the process of moving back into our house at the moment. So our house is a building site, and so unfortunately I can't move everything in. So my office is partly storage as well at the moment. So I just made a quick note there of some of the questions that you had coming at you. It is a very difficult time in every country. I think there is fear, there's nervousness, there's uncertainty, and that leads to both people. Two things typically happen actually in this environment. People either lock down and they just shut off, and I mean literally emotionally shut off, or they lock down and keep themselves safe, but they open up to opportunity emotionally and intellectually. And I think that's where we need to be in this space. I've lived long enough now through several recessions. At 54, obviously I will have I'd have lived to at least 3 or 4 if you think about it from that perspective, that I can consciously remember. And you've written down here indexes, properties and stocks. I've also written down currency there just as a note.
Just wanted to share about the two types of people as you spoke about, and I think it's great that we have you who is 54, and for me I'm going to turn 40 in a few years. But I remember when I started working, it's great to have two kind of perspectives, right? For you having experienced more recessions, being a more seasoned investor. I remember when I first started work for a few years. Then we went into the 2008, 2009 kind of global financial crisis, and it's pretty much similar. People couldn't get jobs. There was just, the markets were just fluctuating. The Dow Jones was 300, 400 points up and down, and there I was trading the markets. And the interesting thing about this quote, being greedy when fearful, is my experience is, I don't really connect with that very much, because that being driven by greed and fear in the market has made me really anxious at that time. I was trading and investing both in currencies, as you mentioned, stocks, warrants, options, and in good days we were making 2,000, 3,000. Other days we might lose 4,000 or 5,000. And I think, as both of us have moved on to really look at property as an asset class as well. And I'm thinking, how can we be, in a sense, proceed with caution, but not really be ruled by these two extreme feelings of greed and fear. So I thought that's something we can talk about as well.
They are dynamics that feed every human being, and it's part of who we're made up. And we're made up by this desire to aspire to something, greed, whatever language you want to put around it, this opportunity that is there in front of us, we want to grab it. You try and put this in context, and you talk about stocks and shares. I bought my first stocks and shares, I think, 25 years ago. So, and in those days you had a certificate, you didn't have the internet, a computer, you couldn't do any of that stuff. Literally, you'd phone up a broker and you'd be like, I want to buy it at this price. And then they'd go, hold on a minute. And then they come back and you've been filled instantly. Now it's instant, but in those days you had to wait, and there'd be some slippage on the movement, and then you get your certificate in the post. It's going back a long time. But the mood, the sentiment, the desire to make profit, the opportunity hasn't changed. The human dynamic to that, whether I'm 55, 25, it really makes no difference. It's still there in all of us. As you get older, as you know now, because if I interviewed you, say, 20 years ago, a different personality would come out. Our experiences shape us. So I remember just going back for those of you that are in jobs at the moment watching this, I can remember going into my offices in 1994, 95, I think it was. And there's some market corrections happening. The construction industry was taking a little bit of a hit. My background was PhD, was in civil engineering. I'm walking in on a Monday morning, and my seniors in the company that were like 5, 8, 10 years ahead of me were being taken up to the boardroom while I sat there as this young engineer, and I'm thinking, what's going on? They're taken up to the boardroom and being told they've been made redundant, and they were escorted off the premises because they weren't allowed to go back to their desks because potentially they might take something or, I don't know, hack into the computer system or whatever out of anger. And I remember at the time thinking, I don't want to be in a situation like this. I'm not prepared to work for another 10 to 20 years for someone else, only to find out that something outside puts a situation upon the company that forces the senior management to make me redundant, having given my life. Some of these people have been there for 15, 20 years.
Yeah.
So although I know people might be fearful of the current situation, which in the scale of our 80 or 90 year lifespan is a matter of 3 or 4 or 5 months. If you think about if this represented the whole of your life, we're just in a tiny blip in that. My bigger fear for everybody watching this is not making choices now that define who you're going to be over the next 15 to 20 to 30 years. So I think it's about sculpting, shaping, modeling, changing your life now in such a way that you switch a 1 degree shift now will make a massive. If I try and go from here to Daniel over there, or the other side over there, I don't wait 10 years and make a massive shift. I do what you did, Daniel, a few years back with your lovely wife, Jo, is you make a small shift, and then over time, that creates a big diversion.
Absolutely. And I really resonate with what you're saying, because a lot of times, a lot of people's investment decisions may not be driven by, the clarity of where they want to get in 10 or 20 years' time.
Exactly.
And a lot of it's precisely driven by greed or fear. And we spoke about last time, we have people queuing up to buy properties in Singapore that are ridiculously overpriced, and there's like a whole bidding like in the fish market. At the same time, some people are just going into buying stocks. But I've also seen really, I think the heart in this is that a lot of people lose their hard-earned money through financial decisions or investments that are not done right. So I think that's really the heart of today's session. Of how should people be thinking? How should they be wrapping their head around this whole issue of how to at the same time make their money work harder, but also think of the end state in mind. And I think one thing you talked about was creating additional streams of income, such that not one event, not COVID, not a recession, not something that is externally driven will suddenly have a huge impact on your family lifestyle or something like that.
Exactly. So I think if you look at it from a point of view of I'm going to take a piece of paper and draw a diagram out for everybody very quickly. Think of there being sort of 2 parallel strategies. One is a long-term capital growth strategy. And another one is a strategy where you're adding value by trading. So I'm going to try and draw this diagram here for everybody. So you've got one curve here, which, can you see that, Daniel? Yeah. This first curve going up is like a capital growth strategy. This is a longer term play. You're buying into investments, property that are going to go up over time. There are going to be some movement, and over time they're going to increase. The other strategy is where you're trading the market. You talked about stocks, where you're buying and selling and your profits are going up. You might have a very profitable day, as you talked about before, where you had a sudden increase in your bottom line, then it's flat for a while, you're trading, then it goes up again. So you're increasing your profit by actively earning cash through a mechanism of trading, etc. There is no right or wrong. I think that's the important thing. It depends on your personality. You've raised a very good point, multiple streams of income. So these are 2 ways to take capital from a place here and increase it. One is more active and could be a bit more volatile and has the risk of going down. The property one does have the risk of going down in a recession, but long term we know will continue up.
Yeah.
The other one, of course, which is not unknown, is passive income. Now, passive income is where we're adding some income down here through our property portfolio, as an example. Then we add another property, then we add another property, another two properties, another two properties, or whatever. And slowly we're stepping up our passive income. So if I shaded that underneath here, for those of you watching, what that means is that irrespective of what our long-term capital growth is doing, we are building up this passive income.
That's right.
And for some people it takes longer, other people it's quicker. It's not really a race. It comes down to just doing it in a safe way.
Yeah.
And that really encapsulates the two conversations we're having. And that's the dilemma. Some people are like, oh, let me get into stocks. Well, stocks is really, if you're going in and out in a short space of time, it's called a scalp. So you're in and out in minutes. You have a day trade, buy in the morning, sell in the evening. That's a day trade. A swing trade is a trade over a matter of a few weeks. I used to trade, and in fact, I've started picking up and looking at trading again recently. I used to teach this as well. And the long term is position trading, which is like over months and years.
Yeah.
So when you ask the question, should I go into stocks? And I think you'd mentioned some of your friends were sort of jumping into the stock market. The stock market is very different to trading an index, which is different to trading currency pairs. So at the moment, if you hold a stock in a particular market where it's affected by COVID, the value of those stocks could go down. But equally, there might be another industry which is actually benefiting from COVID. So, for example, certain manufacturers in food, certain types of food at the moment are seeing massive growth.
Yeah.
Certain industries like, I just heard recently Zoom, Amazon, some of those, online companies are going through the roof at the moment.
Or delivery services, yeah.
Delivery services,
logistics, yeah.
Very good point. Whereas the high street type companies that have shares you can buy into are actually being hit quite hard.
Yeah.
So it's not a question of shouldn't I go into stocks. It's more if you're going to go into trading the markets, choose the right industry that is currently benefiting in this particular marketplace. Now, you and I both know that you can make money on the way down and on the way up as well.
That's right.
But you're really looking for trends, I think, at the moment. And trends at the moment are not so easy to read on the long term because we're seeing a downtrend. And okay, let me rephrase that. Long-term trends at the moment are going down, but it only takes one change in the news and it swings that trend the other way.
Yeah.
So where I've been looking at the markets and seeing where the opportunities are in more shorter windows. And so if somebody can see there's an announcement coming up, the airline industry has been hit massively. These announcements are usually at the moment going to have a negative impact. You can short the market and make money on the way down.
Right. I mean, I appreciate what you're saying regarding stocks, but it is also, it does take someone with experience, someone who has knowledge on how to trade the market.
Yeah.
Because I know of a friend who has been doing this for many years, and he's more of a value investor, a little bit more like Warren Buffett's picking up blue chip stocks. And he was telling me that the last 2-3 years have been pretty frustrating because the market was just going sideways.
Yeah.
There isn't very much of a capital growth. At the same time,
Correct.
he's been saving up, a pot of money and waiting for a time such as this. And he's very clear that he's not looking to swing trade or to scalp, but it's to pick up value stocks and then hold them over a long term for dividends. But at the same time, what
Sideways.
What I hear you say is that it's also multiple streams. And I love the analogy of the steps that you were drawing with passive income. Because regardless of what the market does, what's interesting is the steps are actually stable ground for you to put your foot on for your income. Because in a time like this, I mean, and we are seeing this with some of our own properties, actually the demand for rental properties goes up because people can no longer afford to buy and more people have to then turn to rent property.
So this is a very good point you're raising. And I think everyone watching should appreciate this, that when we come out of COVID, there is a large percentage of the population that will have been hit on a financial level in their jobs, in their businesses, whereby they may not be able to dust themselves down as quickly. Maybe the industry they were in has now stopped. I mean, Wagamama's is a pretty large company over here. It's a restaurant company. You and I have been there together before. And,
don't tell me they're closing down.
So, so they're not. Hopefully they're not going into insolvency, but they're reducing, I think, 100 stores across the country.
Oh,
That's
wow.
a lot of stores.
I love
That's what I just read recently.
Chili squids from Wagamama.
I know. So some of these industries that are reducing, that means there's going to be a lot of shed of people without jobs.
It's true, yeah.
Those people will not be able to buy. They're going to have to rent, or they have to sell their current property. So coming out of the back of this, if you're an asset owning property investor, you're sitting on investments where people cannot physically buy at the moment, they want to rent. So I anticipate a very big surge in the rental demand coming out of the back of this, as we saw in the last recession, by the way. So in 2008, everyone was panicking, and we were getting ourselves ready because we knew what was going to happen is the divorce rates had gone up. I mean, just for your own information as well, I think I met you after 2008 from memory, Daniel. I'm just trying to think when I met you now. But what happened was the divorce rates increased massively off the back of the last recession. A lot more people couldn't afford to get into jobs. So what we were finding is there was a huge shift in the type of property strategy. So instead of family lets being as popular as they were 2002, 3, 4, 5, 6, 7, suddenly we saw a bigger demand for individual room lets, houses of multiple occupation, which is, I know, a strategy you adopt in the United Kingdom.
Yeah.
I think we're going to see the same thing here again in the United Kingdom. I think a lot of people won't be able to afford large flats, large houses, so they'll want smaller units. So there's opportunities here.
Absolutely. I mean, when I was telling you about trading the markets, every time you're trying to guess what is the market going to do, is it going to go up, is it going to go down, and you're trying to do trends, lots of technical analysis. But I think one thing that has allowed me to sleep better at night is not so much to guess where the market is going, because it's anyone's guess, right? But more to, like you say, have the knowledge such that if and when the market goes in this certain direction, I know what are the actions I need to do to be able to take advantage of the opportunity. And I mean, it's not about in the same time, people are being divorced or people can't afford to buy, and then we go into grab properties at cheap. It's not that. And I think one thing I've learned in my mindset over the years is how can we then create win-win situations. And in fact, that's one of the properties we're having right now. We initially wanted to do an Airbnb strategy, and obviously it's not going to work in the COVID and the travel lockdown. But we're now thinking, how can we look to provide homes for vulnerable people who might need it? And the latest I've heard is there's a young mother, I think in her late 20s, with 2 children. And
fantastic.
Even though it's a bit of a lower rent, and we're thinking, how can we be, just be beacons of light in this?
Socially conscious, I think. Exactly.
Absolutely.
And that's the strategy I know I adopt in the United Kingdom. I can see Daniel online tonight, which is nice to see him and his lovely wife. They do the same thing. He's having some of your tenants socially challenged people. So the government will pay us rent for certain periods of time for people that are struggling financially, and particularly in a place like now with the COVID, it's a great opportunity. And these allow us these longer term rents as well. Mm-hmm. So this is about, going back to here, this is about putting in a strategy which has not just a long-term capital growth, but also a passive income alongside it. Mm-hmm. And that's one of the huge benefits of real estate investing. And I want to juggle between these two, because I think, there might be people thinking, well, are we trying to put you off the stock market? And remember, we're not here to give you advice. Actually, I think there's opportunities to trade as well in the markets. I personally am a bigger fan of currencies and indices. Indices you can clump together different industries to get an index, and that index is representative of that indices. If you go and have a look at the indices for the different countries at the moment, and I was looking at this a couple of nights ago, you'll see virtually every country's index is coming down because we have had a global hit. Well, when we come out of COVID, if it's come down this far, what do you think it's likely to do? It's going to do a reversal. So there are trends that will, without a doubt, reverse in the next 2 or 3, 4 months as we come through and vaccines get introduced and the world starts to stabilize and the numbers of deaths, which are sadly still increasing in some countries, start to stabilize. Those countries will get back on their feet. The economies at the ground level, the rental markets will increase. So go back to the property again, the industries will increase. And with that comes gross domestic product. And with that comes an increase in the indices for that country. So you could just choose over the next few months, if you, as Daniel said as well, you've got to learn to do this properly. So study it, get a good coach, good mentor, something to learn from to do stock market properly. And you can trade Forex, which is a lot more volatile at the moment. But again, there's trends happening there. There's trends in indices. With stocks, it's a little bit more challenging because they do get impacted so heavily by obviously what's happening at the moment. Right. So it's really a balance. And if you're sat there on a pot of cash right now and you've got a slightly longer term view, I personally would weight towards property and real estate, because the benefits at the moment are, not only do you have the benefit of doubling the value of that property or that portfolio in the next 5 to 10 years, but getting an instant cash flow. And it's a strong, solid base, brick built building where everybody needs a roof over their heads, no matter whether the market's booming or it's going down. So if security and stability is what you're looking for, then personally I would tend towards real estate.
I like what you say about weighting it, and I think I learned this from you some years ago about having different pots and thinking about your money that way, right? So it's not just all in, because to some people it might be all in a bank account or a fixed deposit, and they think, what do I invest in? And they're thinking of this amount, whatever it is. But actually you can think of how can we then apportion different pots to different vehicles to then look at different purposes. So a lot of times, without having the intentionality of that end goal in mind, people might think, oh, maybe I'll jump into the stock market, or should I do a forex? But at the end of the day, I don't know about people over there in the UK, but in Singapore, a lot of us love the idea of passive income, and which is why they end up buying property here, a condominium that costs millions of dollars, and they say, I'll rent it out. Hopefully, it generates me passive income. However, we know that that's not going to work. So I remember one of the important quotes was then beginning with the end in mind. And a time like this is also a good reminder for us to think of that, because like you said, every little move that we do is going to have a huge exponential impact over time.
Yeah. And, it's easier to make a smaller move now than a bigger move. The challenge, if somebody's fearful, is a big move almost seems too overwhelming.
That's right.
But one small move, you move a small amount of your funds and you say, right, let me go and invest in one property to start with. I'll leave some here. I mean, I don't know what your interest rates in the bank over there are. Last time I was over there, it was very, very low.
So less than 1.
Yeah, you see that.
Almost zero.
Yeah. I mean, if somebody can get themselves a 6, 7, 8% return, a year, even a yielding property at 6, 7%, and they bought the whole property for cash. That is 6 to 7 times more than you're currently getting in a bank account over there. And remember, that would be a yield based on cash flow. So if you take the return on that money, or the yield if you're buying it for cash, return will be the same thing. And then you look at the capital growth on that property as well, completely different experience. Now we're looking at a property that you've bought for X. It's producing you every single year, maybe a 6, 7, 8% yield. And if you go for one of these strategies where the government will pay you for 5 to 7 years, then you've got every single month. There's no voids on that property. Now, imagine over those 7 years, the property goes up. This is 100 grand property and it goes up by £20,000. You've got a 20% increase in your original capital on top of the yield you're getting. Had that money been left in the bank, I would argue that it's barely going to have increased over the same period. Now, if you had $100,000, $200,000, $300,000 in the bank, what if you took 100 of that and you invested that into your real estate, and then you took the other 100, 200 and you left it there and you said, right, I want to start a business. So you take some of that for business. You might put some in the stock market and you leave some in the bank as your safety net to give you a bit of time, a bit of security for 2 or 3 months.
That's a good thought. And I think especially for those who want to start a business, or they want to look at, perhaps trading the market, which is a much more active and I would say a riskier strategy, because they're looking at higher returns, by scalping the market, for example. Then all the more the passive income strategy is as a must-have strategy, I would say, in the whole mix, because that then gives some additional security to your overall portfolio.
Yeah, and I'm just making a note, actually, 3 things that maybe everybody could write down. Sorry, I'm scrolling on my notes here, but 3 things to consider really importantly. One is time. So how much time do you actually physically have? At the moment, if you're in lockdown, you're on a month over there at the moment, you may have more time, but when you go back into your workplace, everything becomes busy. And I can almost guarantee that Daniel's had a conversation with somebody that he knows over the last 3 or 4 years, and they said, yeah, I really want to do that, but I'm really busy right now. And 3 or 4 years later, nothing's changed for them. And all of a sudden, we're in suspended animation now, because we have been forced. I mean, I had this conversation just recently in a podcast where the gentleman I interviewed said, none of us had any choice here. We were forced into lockdown. So that's created that one thing that everybody complains they don't have, which is time. So if you are looking to win back time, then you're going to have to put the time into whatever it is you want to do to win that time back. It sounds like a bit of a confusing sentence, but it's a reality. Second question you've got to consider is, so do you want more time? Second question is, do you want to be hands-off, as Daniel's just said there, or hands-on? Hands-off means that you might buy an investment. For example, you might buy something in the United Kingdom which has a rent on it for 5 years. You put your cash in it, you get a return for it. You do nothing. You work in Singapore, you love what you do, but you have this security of income coming in every single month. If you said to me, I want to be more hands-on, or I want to be a mixture of both, maybe you take your pot of cash and you go, right, let me slice it down the middle. Half of it goes to hands-off, long-term security, passive income, as Daniel's talking about. Other half goes to a strategy where you're more hands-on. It could be trading, currencies, forex, whatever, building a business. So you've got a mixture there. And then the last question, I guess, to write down here is, are you looking for an active or a passive income, as Daniel's talked about already? So if you said to me, well, I want a more passive income, go find investments that are solid, long-term history where you know there's a massive demand. And the one vehicle that I'm aware of right now in the global markets is real estate. Everybody needs a roof over their head. Absolutely. Yeah. Every single human being deserves and needs a roof over their head.
Yeah, I mean, if you go back to Maslow hierarchy of needs, right? It's
yes.
If you think about the physical, it's really at the bottom. I mean, now people are saying Wi-Fi is at the bottom, or in times of COVID, it might be toilet paper. But
true, it's true though.
But it's
security and our physical needs.
That's right. So I mean, everybody needs a home, a roof over their head, and I think apart from the security of having it ourselves, what more a blessing we could be to others if we could also provide that shelter over their head in time of need. And I think going back, circling back to the question, what do we invest in? I think one topic that seems to emerge from this is, it's beyond stocks or property or forex and anything. The biggest investment that anyone can make is really in themselves, because they're the biggest asset. It's not about which blue chip should I buy, or which REIT, or which property. But if you have the right knowledge to know how to make sure your investments are, you manage your risk, at the same time take care of the downside and let the upside take care of itself, then I think that's something that no external circumstance can take away from you, because you have it all in here.
I agree. And born poor, die rich, the concept is none of us are there's a percentage of people that will be born into wealth because of their inheritance, whatever, but most people aren't. Physically we're born with the same means and abilities. It's just what we do with that time and that space in that period that we're alive. But I just want to go back to my drawing earlier on and say that if this line represents your lifespan from when you're born to when you die, at what point along here do you turn that into a wealth of finances? In other words, born poor, die rich. And there's two things for myself and Daniel. One is our health, our relationships, and our wealth. And we're talking in a little blip of time along this whole curve at the moment, just here. It's what you do next. So what are the decisions that you can make? And I know people don't like the idea of being greedy. The concept isn't really greedy. It's saying taking opportunity whilst it's there. So when everybody else is turning their back and being fearful and withdrawing, it leaves things on the ground for us to pick up and work with. There's diamonds all around us. I do believe, I'll be frank with you, I think the Singapore market isn't really the ideal market for property investing if somebody wants a high yield, long-term passive income. I think what you've had in Singapore for many years is this capital growth, particularly with the expats and the external companies investing there.
Right, yeah.
So anybody watching this, if you're thinking, oh, that's all right, Dr. Owen and Daniel, how are we going to do this? You're going to have to look beyond. And there's 3 letters that Daniel and I adopt in our property investing, and that's SAP. And maybe we can talk about this on another occasion, Daniel, but strategy, area, property. So once you're clear on a strategy, if that strategy doesn't work where you live, for example, when I started buying property, I wanted passive income, but low value properties. Well, in the Oxfordshire area, the average low value was about 150 to 200,000 pounds, and they weren't yielding a very good cash flow. So that strategy didn't work in that area in the same way it didn't work for you in Singapore. So we then had to find another area. So it's strategy first, defining that. Then you move to a different area or a different country. You'd have to physically move there, you can buy there. And then the P stands for finding the properties in that area. That's the key philosophy, isn't it, Dave?
Yeah, absolutely. And I think I spoke to a friend who is very good in the local real estate industry. He's a very, very good real estate advisor, salesperson. And he was sharing with me, actually, the government, with all the cooling measures that are put in place, the government already knows that they want to minimize fluctuations or growth over time. So, if it grows slowly, 2-3% over time, that's ideal in the government's eyes, and they have interventions in order to make that happen. So, I mean, no longer are we going to see the days where Singapore came from, this exponential growth. But I think it's a more slow, stable market, which in a sense caps the capital growth, and at the same time where the rental market is not going to give you a positive cash flow, then perhaps the best asset class here for investing for passive income may not really be property.
Yeah, exactly. And you might remember when I first came over, I think it was maybe 8-9 years ago, and I stood on stage in front of a large number of people, and I said, mark my words, there's one indicator that we use, which is the house price to salary ratio. And I was showing different examples around the world. And I showed Singapore, and I said, you're into double digits. And that's got to correct. And there were people in the audience that said, oh, no, he's not from this country. He doesn't know what he's talking about. We're going to be fine. It's going to carry on. And what happened? It corrected.
That's right.
And then the government stepped in to correct it.
Yeah.
So it wasn't feasible. It couldn't sustain itself because the salary to house prices were just becoming disproportionate.
Yeah. In fact, it's great that the government stepped in with the cooling measures. Otherwise, it will just continue to go up, and then it will have a much steeper decline. Yeah, and I think that would hurt a lot of people as well. Yeah.
Yeah. So I mean, don't watch this and feel frustrated. If you're watching this live and you're thinking, oh God, this sounds great. I totally agree with what they're saying. Maybe I've got some. You may have money in stocks at the moment, and some of those stocks have corrected. And I can't give you advice, nor can Daniel. But I had a conversation with a friend of mine recently. He was showing me his portfolio, and I just said, to me, the sensible thing at the moment, because of the volatility, is to extract that money out. Now he's been holding on to this for so long, and he's had an increase, and now it's obviously dipping down. And I said, all that work you've put in for the last 3 or 4 years is being eroded in the space of a few months.
That's right.
Now, a smart trader. Now think about the difference between a trader and an investor. Holds. A trader gets in and then sells, takes the profit, waits for the next opportunity, gets in and sells again. He was holding as an investor. I'm talking to him as a trader, and I'm saying, you've hit your peak now, you've hit your resistance, get out now. Yeah, but I've been holding on for so many years. And I said, if you get out now, as it comes back down again, you buy back in, and then it'll go back up again. At some point, you'll get the increase in the market again. But right now, all you're going to do is that profit's being eroded. And it was breaking the mindset of this sense of, I don't want to lose what I've currently got. It's like, I don't want to lose my job. I don't want to lose my money sat in the bank account. What if I take a risk and put it into property? I mean, my view is it's probably more risky to sat in the bank there, because in 7 years' time, it'll make hardly anything for you. Whereas if you can buy a property slightly discounted with a good yield on it, and then you sell that in 7 years, even if you sell the property in 7 years at the same price you bought it for and bring the cash back, you'll have made 7 or 8%, 9% a year on that money, which is 7 to 9 times more than you'd have made in the bank, if you think about it from that perspective.
It's true. And I know we're going really quick here, and some people are like, wow, what did he just say? I didn't catch that. But for those of you watching, if you just pick one tip or one thing that Dr. Rowe and I have been sharing, and you apply in your life, is going to make an exponential difference. Remember, it's just that one little shift. Even if you just take what Dr. Rowe shared, thinking about money in the bank, how can you invest in an asset that will generate an income instead of 1% or less? You could even say make 5%. That's 500% more than what you have left in the bank. Yeah. And one of my friends that I've been talking to recently, he has gold. He has bought gold many years ago and through a scam in Singapore, and actually cheated a lot of people of money. And actually one of my coaching clients. And then I was working through, and interestingly, the gold has now come to almost a 10-year high. And then we were having discussions about what should we then do. And obviously I can't give him advice, but I then asked him, so what is your break-even point? When you got in and you got cheated by the scam, what is your break-even point? And he said, oh, actually at today's prices, which is almost a 10, 15-year high, I've broken even. And I was like, okay, like you mentioned about the resistance, right?
Right.
How much higher do you think gold is going to go now that it's hitting a 10-year high? It's like, no idea. But, the people, even though we can predict the future, very often these trends regress to the mean. So in all likelihood, it's going to come down. And even if he wants to be invested in commodities, he can then go in again at a lower price. But at the same time, his goal then was looking at passive income streams. And gold, a lot of the other clients I speak to might have invested in land banking. Gold, land banking, these are things that can't generate a passive income.
Right.
And it's really more a long-term capital appreciation strategy. And a lot of them find holding on to these pieces of paper or gold and perhaps not having their lifestyle increase or feeling that they have done a good investment.
So I'm just drawing a few diagrams as you're speaking. So for those of you that aren't clear on what Daniel's talking about, it's typically when you see a commodity, a stock or whatever it is, in this case gold. If you see that particular commodity hit a peak and then it comes back down again, then it increases again up to here. Each time it hits that area, it's called an area of resistance. This is called an area of support. So as it comes back down again, your friend that may have bought wherever it was, it came down, it's finally came back up to here. Now, at that point there, if he sells, he's broken even. Now, what a lot of people will do is their fingers are crossed. They're only looking at that. And if you're only looking at that, you might not have looked historically back and you think it's going up. But if you pull back from it and look at the longer time frame from history, history shows us that this seems to be an area where it tends to want to bounce down. It may not do, but unless there's a strong enough reason for it to break through and carry on up. And normally it never just does that. Normally it goes to there, then comes back to here. Might break through or it might go back up there. So from a safety perspective, one might argue, well, let me just get out now because at least I've recovered whatever I've lost before. And let's see where it goes next. And I think that's the conversation you're probably having with him. Is that right?
Yeah, absolutely. It's kind of like a counter-cyclical asset, isn't it? Because now there's so much uncertainty in the dollar, the US dollar, in the stock market, and a lot of people are fleeing to gold and it's pushing the price up. But this is COVID and deaths everywhere. When the situation clears up, the next 3, 4, 6, even 12 months, it's very, very likely gold is going to come back down. I mean, I don't have a crystal ball, but just thinking, looking backwards, we know what the prices are going to do.
I mean, long term, gold has a history of increasing, as we know.
Yep.
It's a contrarian indicator in the sense that if the market's booming, usually people aren't investing in gold. When the last recession hit 2008, the big global one, gold went through like this and stormed up 10 years ago. So that's why we're talking about this 10-year swing. And so anytime there's something negative, gold is the default security. Going back to your other statement, which is interesting, if the circle here represents everything that you have in spare cash, one of the considerations is what if you took a percentage of that and put it into one asset class, and then you took another percentage, you put it into another asset class, as opposed to putting all of that money into one asset class? What if you were to split that and say, right, part into property, part into the stock market or commodities? Again, we're not advising here, but it's just a consideration to take your eggs out of one basket and start to spread them. Partly passive, partly active, maybe one long-term capital growth, something along those lines.
Right. And then, I have friends also asking me, Daniel, I know you have been in property a lot. Do you invest in other things like commodities and stocks? And I was then sharing that, for my family and I, our priority now is to build that steps of passive income that we saw earlier.
Right.
And I think once we reach a certain point, we want to then be able to diversify to other asset classes. But once again, it's having that clarity so that I don't get distracted along the way. And I might end up trading or investing in gold and holding on to gold bars at home and wishing I had more passive income. So it's really having clarity, keeping laser focused on that goal as well.
And you've got a purchase going through, I think, at the moment in the United Kingdom. Is that right?
That's right.
What sort of cash flow is that going to produce?
That's going to produce maybe about 500 or 600 pound a month, which is maybe about 1,000 Singapore dollars.
That's good.
So, yeah, and we're buying it here. I don't have to fly to the UK, which is just amazing.
Right. And that's locked into, is that with normal tenants or a government scheme?
For this one, we actually managed to secure it on a 3 to 5 year scheme with the government. So effectively the government is the tenant. So that means there's no void periods where the property will be empty. So happy days. And I'm so glad we've actually shifted a large part of our portfolio to this strategy over the last years. And I think it's really put us in a good position in a time like this because it's going to be I can sleep at night, knowing that the properties are providing a good shelter at the same time. It's going to generate some passive income for us.
Well, it's interesting because I think here in the United Kingdom, we're going to have an increase in the number of social housing requirements because more people will be struggling because of what's happening with COVID, loss of jobs. So the government will be proactively looking for investors who have assets to take that, plus on top of that, asylum seekers as well. So, yeah, maybe a topic for another conversation.
Sure. I know we've been going on for almost 40 minutes right now. And thank you so much for your time. I think whenever, we're here, and I thank you just so much for, your passion, just how sincere you are to add value to people, and, just go on for 40 minutes and we can't even tell the time.
Sorry about the scribbles. I get excited. I haven't got my flip chart here. So
It's great. It's great. I think it's fantastic. For those of us watching, feel free to pop your questions, your comments. What are other things, should we have another opportunity to have Dr. Rowe live with us? What are things that you like to cover? If you haven't already, make sure you get yourself subscribed to our Facebook page. We have a YouTube channel as well. And visit our website at www.bornpoordierichcom. And we look forward to seeing you again soon. So this is Daniel signing off.
Thank you. And it's Dr. Rowe here. Thanks for having me on, Daniel.
Thanks, Dr. Rowe. Have a great weekend. Cheers.